Back to counting down earnings, and what a strong set it has been from Cummins. In fact, let me welcome on board the MD on that note, Mr. Ashwath Ram, the MD at Cummins India, joins in the show right now. Mr. Ram, great to have you today on ET Now. Good set of numbers, really. If you could just walk us through what kind of growth drivers you've seen, and more importantly, can we expect around this 18 to 20% growth from you for FY25 as well?
So what we have indicated for the last 3 or 4 years and what we will stick to is that our aspiration is to grow at 2x of the GDP. And so far, we've been able to do that and beat that. I don't see anything going forward that is going to change that prevents us from doing that. That being said, we have seen significant strong growth in the domestic markets. We have seen growth excess of 25% for us over the last few years in the domestic market, whereas we've started to see some slowdown in the global market. So last year, global markets for us declined by a little over 15%, whereas domestic markets grew by over 30%. And when we look at FY25, we have a similar aspiration to grow at about 2x of GDP. We think we'll grow at least by maybe not 25%, maybe slightly lower, because we are coming out of a very high demand phase into a more neutral kind of phase. But we do see that we do see growth coming in for the next financial year as well.
If one looks at your current your quarter gone by, the top line and the bottom line is growing faster than the top line. And if I look at the return ratios, there's a marked improvement in all your return ratios. Have you reached the peak of your return ratios in terms of where it could go? Because the cyclicality has really benefited you.
I wouldn't say we've reached the peak of it. I think we can do better, and that's what, as management, we are continuously striving to do. But if you look at all the variables, they are at amongst the best that they have been historically. We think there are a couple of variables that one is that consistently we have been focused on improving profitability across all our market segments. Second is we have been launching systematically a whole range of higher technology kind of products, and we will continue to do that in the future. Also, our utilization, we invested a lot in capacity about 4 or 5 years ago, and some of that is beginning to pay off now. And as our utilization improves, some of these ratios also tend to improve. But we have had a perfect storm of good news as far as margins are concerned. So to do better than this will require a continued amount of work from the whole company to get there.
So return ratios haven't peaked. You're definitely working towards improving that. But I was just listening into your con call yesterday, and you talked confidently about maintaining that 33 to 35% margin band. And this despite the rise in the raw material price. What makes you that confident?
We've been working for quite a few years on trying to consolidate our base, which means consolidate efficiency, consolidate our cost structure, consolidate the product line so that we have the best product line to have the best kind of margins. We are focused on the mix. We are focusing on how much we can export more. We have improved our position in the aftermarket and through our distribution business. So it's a combination of all of those activities that has led to better margins. So none of those are going away. As a matter of fact, we will continue to work on those and continue to get better. So that's why we feel confident that we can hold on to the levels I indicated and attempt to do even better.
Why have exports lagged for the quarter gone by? I mean, we are talking about India becoming as a manufacturing hub, PLI schemes, India, China +1 manufacturing moving to India. Why are you not benefiting because of that?
We are not benefiting because our power generation markets for the low horsepower are down. As a matter of fact, in the high horsepower business, they have not actually gone down. They have been flat, and we expect that they will improve and even get better even as early as this year. low horsepower, all our major markets, whether it be Europe, whether it be Africa, Middle East, whether it be South Asia, whether it be LATAM, every single market is down for one reason or the other. And despite us having put a lot of effort on cost and a lot of effort on many new products, we have not yet started to see the realization of that. But we are pretty confident that the exports will continue to grow in the near future.
There is a very basic question which I've been wanting to ask you, which is that if I look at electricity availability in India is increasing. Solar power connectivity is increasing. Cummins is in gensets. Gensets are also used as backups. Gensets are also used when there is a shortage of electricity. But if the fundamental structure of the Indian utility sector and the power sector is changing, what happens to genset demands?
Yeah, so this same hypothesis has been played out in multiple markets around the world. Countries in Europe or in North America have had stable grid and good supply of electricity for decades. And we continue to see demand in all of those markets grow. As a matter of fact, now when our grid has almost 35 or 40% of renewable energy, we are seeing demand higher than we've ever seen in history. What happens is that as the percentage of renewable energy in the grid increases, the grid starts to become more unstable because you can't control solar power. It works only 8 to 10 hours a day. You can't control wind power. It works in an unreliable manner. But the backup that is required to balance all of these out has typically been internal combustion engines, either powered by diesel or natural gas, or some of those kinds of substances, especially in the bigger, higher horsepower ranges. There is no suitable alternative. Further, we continue to improve the efficiency of these products. We are able to now not only have them at higher efficiency with lower fuel consumption, we have also converted some of these products into multi-fuel products, which means if you could traditionally burn only diesel, you can now burn natural gas, you can burn propane, you can burn eventually hydrogen in some of these engines. So it will play a dual role in the sense that as the transition happens to a completely green renewable energy source, actually we will see for the next decade or so increase in the demand of conventional fuel because they are the most efficient and cost effective for the market right now. And then gradually we'll see the market move to multi-fuel is the hypothesis that is playing out, and we are well positioned to be a significant portion in that market.
Taken the other big talking point for your business, Ashwath, has been the fact that CPCB transition, which is happening to the four norms. Tell me about that. How are you preparing for that? Are the earlier ones completely phased out? Are you sitting on decent inventory? What kind of trends are playing out on the ground with respect to that?
Yeah, we have been ready for CPCB IV+ now for close to 18 months. So we are completely ready. We've tested over 5,000 of CPCB IV products in all the product ranges have been sold. They have been running. We have been receiving very, very positive news about how well they are running. The customers like the features. The customers like the performance. The CPCB II inventory levels of the pre-buy, etc., have all burned down. And when I look at the inventory levels in the supply chain, it looks like they are normal to below normal. So we don't see any further blip in the transition from CPCB II to CPCB IV+. So we feel we are well positioned to do the transition by next month and then move to 100% CPCB IV+ era, where because of the higher technologies that are used in the product, Cummins as a company will be a lot more competitive.
On that note, we'll let you go. Thanks, Ashwath, for making time and speaking with us. So that's the latest coming in from the management of Cummins. The stock a bit under pressure, but do remember the stock had run up quite meaningfully.